On Wall Street, next week is a big one for earnings. 13 Dow components and about 1/3 of the S&P 500 released their quarterly results. And there's one school of thought that earnings could drive the stock market rally. Bob Pisani tells us why next week is a big one for investors.
Earnings season is heating up and things really get off to the races next week. We're about to enter the busiest stretch for earnings with roughly 180 S&P 500 companies and more than a dozen Dow components reporting quarterly results. That includes a number of big oil companies like Chevron and ExxonMobil, industrial names like Caterpillar, consumer goods giants like Procter & Gamble, and tech titans like Facebook and Amazon. And that's just the tip of the iceberg. Next week will be crucial to watch because so far analysts have high hopes for the season. Second quarter earnings are expected to jump almost 10% from last quarter. That's up from 8% at the start of earnings season for the second quarter. And revenues are also picking up. That's why the stock market's up. More companies have been beating on earnings, and they've been beating by more than usual. But the growth has been confined to a few key sectors. So other than energy, technology is supposed to be the single biggest contributor to earnings growth this season, and tech stocks have been the biggest winners so far this year. Tech earnings are expected to be up 16%. Keep an eye on energy earnings. Energy stocks are way above historic values because everyone has gotten the price of oil wrong this year. They jacked up estimates because they assume oil will be $60 now, but it's stuck in the mid-40 range. And those earnings estimates have already been coming down. That's why energy stocks have been down this year. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.